We closed off 2021 with continued gains across all provider types, with the not-for-profits closing in on the 190 ADS and the private operators seeking the $200 ADS. Last month saw the industry finish 2021 at just over 192. Total claiming activity for the month saw a slight retreat as providers were balancing their eligible workforce. The voluntary ACFI claiming, or funding uplifts, came backwards across all cohorts, with all the providers ending the month with around circa 2.5% of their voluntary claims being submitted in the December period alone. We expect this will start impacting ADS as claiming activities are the lead indicator for ADS growth. And with a sub 3% voluntary activity month, ADS will feel the pressure this month. Now, with that claiming activity decline in December, we saw growth in the portion of Medicare claims greater than 12 months of age. The age of active claims in Medicare system grew by circa 1.5%, resulting in the voluntary ACFI claiming. Now, complex healthcare claiming across procedures that we monitor were mixed, with a retraction of 4B and procedure 5 claiming for the first time on record. The private operators still have circa 63% of their claims in Medicare lodged with a 4B pain management outcome attributed to it. However, with providers dealing with their own workforce challenges and maintaining allied health contractors, and the known conclusion about pain management not being included in ANAC, this may be the start of a new downward claiming trend. Well, occupancy levels remained stable in December as providers are working through their relevant challenges in the current stage of living with this pandemic. Now, the industry was relatively flat, finishing the year up with just under 89% of their occupied bed days filled during the December period. Now, that saw our industry sample taking nearly 600 fewer permanent admissions in December than in the November period alone. The private operators benefited the most this month with hospital transfers, as nearly 20% of new admissions in December came directly from hospital, which was nearly a 2% jump from the previous month's performance. And with the admission movements between new entries and departed residents, we saw the not-for-profit operators open up slightly, which indicates they departed a lot of high-funded claims during the holiday period. Now, however, the average acuity, which is measured by a new resident ACFI rate at admission, for the not-for-profits has dropped over $4 in ADS in December alone, as we saw the average age of entry for the consumers stay flat over that same period. Private operators had their age of admissions jump up to above 86 age at entry, with the industry sitting now at 85.5 age of entry. Now, respite always seems to be proven strong at this time of the year, as the industry experienced a further 11,500 bed days used in December than the previous November month. We hope to see these respite days slowly converting into permanent admissions in the upcoming months. Now, as the sector continues to contain this phase of the pandemic within Australia, we saw a reversal in the care minute gains achieved in November, with all reported segments coming backwards. Agency was the only one that jumped up 33% over December, as the sector continued to struggle to fill vacant shifts over this holiday period. And allied health staff fell by nearly half of what it gained in November, settling in at 1.6 minutes worked on a per bed per day basis. Well, thank you for joining us today. From all of us at Mirus, we hope you, your families, and staff have a happy new year and a positive 2022. I'm Robert Cavino, and this has been Mirus Industry Analysis, January edition.